This is Business Week Armenia, CivilNet's weekly economic digest. Here's what you need to know this week. Armenia's central bank this week cut interest rates by 25 basis points to 8% as inflation continues to remain below target levels. During the second quarter of 2024, 12-month inflation continued to remain below target, standing at 0.3% in May. 12-month core inflation remained in the negative range, standing at negative 0.5% in April, the central bank said in an explanatory note. The bank stands ready to take adequate actions to ensure that the price stability objective of 4% inflation over the medium-term horizon is met, it added. Speaking with reporters this week, central bank head Martin Galstyan said he expects inflation to reach 2.2 to 2.5% by the end of the year, substantially higher than now but still well below target. It marks Armenia's 9th rate cut since last summer. Prior to that, the central bank had not lowered rates for more than 2 years. In recent months, Armenia's economy has continued to expand substantially after growing by 8.7% last year and 12.6% the year prior, according to official figures. That has largely been fueled by massive inflows of capital and labor from Russia and a vibrant re-export business. A senior Russian official said this week Moscow is working with Yerevan to restore access to Mir payment cards in Armenia, just months after almost all banks in the country moved to block those transactions, citing US sanctions. Russia is also seeking the same in Kyrgyzstan, he added. We are engaging with Armenia and Kyrgyzstan on this, but they are under terrible, severe pressure from Western countries, Deputy Foreign Minister Alexander Pankin told reporters. In response to a CivilNet inquiry, Armenia's central bank neither confirmed nor denied that, saying only, "Your question refers to business relations between economic entities, which the central bank is not authorized to interfere with. Armenian commercial banks independently decide which payment systems to cooperate with based on their risk management policy, including sanctions risks." In March, 17 of Armenia's 18 banks stopped servicing transactions made through Mir, Russia's national payment system, just weeks after the United States blacklisted the system's state-run operator. Only VTB Armenia, the local subsidiary of one of Russia's largest lenders, still accepts the cards. Russia began developing Mir in 2014 as a way to skirt sanctions imposed in response to the country's illegal annexation of Crimea and initial invasion of eastern Ukraine that year. It has since issued over 287 million cards. Mir cards became the payment method of choice for many Russians after MasterCard and Visa pulled out of the country in response to its full-scale invasion of Ukraine in 2022. Armenia's anti-monopoly watchdog this week greenlit the sale of HSBC's local subsidiary to the country's largest lender, moving the deal one step closer to completion. "We have concluded the sale does not lead to the restriction of competition or damage the interests of consumers," the Competition Protection Commission said in a press release. All eyes now turn to Armenia's central bank, which must also give its approval. A timeline for that was not immediately made available. In February, the London-based banking giant HSBC announced it had reached an agreement pending regulatory approval to sell off HSBC Armenia to Ardshinbank for an undisclosed sum. That will leave Armenia with no Western commercial banks. HSBC Armenia reported about $27 million in earnings last year against Ardshinbank's roughly $156 million. Just weeks after HSBC's announcement, the Bank of Georgia Group, also based in London, revealed a $303.6 million deal to acquire Amiria Bank, Armenia's second largest lender. The central bank has already okayed that sale. It has not indicated publicly why it is taking longer to consider the HSBC sale. In February, the ratings agency Fitch said it expects Armenian banks' credit metrics to remain better than historical averages for at least the next 2 years, citing continued immigration and capital inflows from Russia. And as always, please follow CivilNet for the latest news and independent reporting from our contributors on the ground here in Armenia.